Welcome, my name is Steven Primo. I'm the president and founder of Specialist Trading. If you're not familiar with us, we've been doing presentations with FX3 for a good 4 or 5 years now. We are an educational company. Excuse me. We feel that the reason why most traders, especially Forex traders, fail is because they basically are taking themselves out of the game. They're relying on someone or something to tell them when to trade, what to buy, what to sell, at what price, rather than making their own decisions. So what we do is supply you with information and techniques that I've accumulated in my 38 years of trading so that ultimately you can empower your own trading. That's the only way we feel you'll become a consistent trader, by making your own choices. So this is what we try to do. And just let me make sure my volume is okay. I'm going to turn my volume up. I see some people are saying the volume isn't as loud as it can be. I'm going to turn my volume just as much as it can, okay? So my volume is up to the peak. If there's something that maybe you want to close your browser and try again, or change your own volume. Okay, so now I'm going to show you these 3 techniques that hopefully can empower your own trading. But before we begin, we are required to show you our disclaimer. I'm going to show you a lot of performance results using these 3 key components, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. We are required to show you that. So as you're taking a moment to view our disclaimer, I would also like to make mention to the fact that FX Street has provided us with an informational microsite. You see there in blue is the large, that is the actual large link. We've reduced it and abbreviated to the lower link on the bottom there in yellow. So if you simply copy and paste that, it will take you to the informational site that FX Street has put together for us. In fact, I'll show you what that is. It gives you a lot more information about the actual strategies that we teach and mentor in courses, as well as some more information about myself. Now, Pro Trader Strategies is our sister site, so they market and mentor all of my courses. And they have also put together a Twitter page for us. You can follow us on Twitter. I post different signals and different ways of getting more information on us at SPCLSTTRADG. And as well, Pro Trader Strategies has also put together a Facebook page for us. So there's lots of ways to get information on exactly what we do and how to contact us and how to learn a lot more with what we do. All right, so here's what you're going to learn today. And I have a lot of information to give you, a lot of slides. So I know some presenters like to take questions during the course of the webinar. I'm a little bit different. I would be more interested if you just wait till the very end of the presentation to ask any questions. That way, we won't lose sight of where we are. And many times, if you wait for a slide or two, your question will be answered on the next slide. So just wait till the last 10 or 15 minutes, and then we'll take all questions. All right, here is what you're going to learn today. I'm going to teach you component number 1, which is what we feel the best way to trade in sync with the market. Then I'm going to share with you a price bar pattern that you should be looking for in virtually any charting methodology or strategy. And then lastly, I'll show you an entry technique that will really fine-tune your entries. Okay, so these are all the 3 main components. As I stated, we use anywhere from 1 to all 3 of these in virtually all of our trading methods at Specialist Trading. I'm going to share with you all of these. All right, here we go. Component number 1. You must trade in sync with the trend. Now, everyone knows this. This is Trading 101. Everyone says, okay, in order to be successful or consistent in the markets, you have to be in sync with the trend. Well, if everyone knows this, then why do the majority of traders fail? We think it's because most teachers or educators have made finding the trend too difficult, too complicated. Either they say, in order to find the trend, you have to look at the higher time frame to find out what the lower time frame is doing. Or you have to have an abundance of indicators that all have to line up to tell you what the trend is. Or lastly, you have to look at some pattern, higher highs, higher lows, or vice versa in order to find out what the trend is. Those are all well and good, but they're too complicated. We're going to show you something that's more powerful and simpler to apply to find out what the overall trend is. All right, let's look at this generic chart. It doesn't matter what this is, if this were a stock, a currency pair, or a future. Someone looking at this would say off face value, well, Steve, there's no trend here. we're just kind of going sideways. We're in a range, okay? We're going down, then back up, then back down again. So I'm not going to trade this because I've always been taught to stay out of a range. Well, that's not what we teach at specialist trading. The way to find out what the overall trend is to simply apply the 50-period moving average. And then we ask ourselves, where is price in relation to that? If the majority of price is above, well, then we're only going to be buyers because the overall trend is up. All right. Now, conversely, if we look at this generic chart, once again, someone who hasn't become a student of mine or hasn't taken any of our courses would say, well, there's no real trend here, Steve. We're just going sideways, so I'm not going to do anything. Well, no, that's not true. If you add the 50-period moving average, you ask yourselves, where is price in relation to that? And you see that price is below. So that means that the overall trend is down. That means that if the trend is down, you should only be looking at things to short. We are in no way going to be buying below the 50-period moving average. Conversely, we're in no way going to be selling above the 50-period moving average. This right off the bat eliminates half of your losing trades because that's how much consistency there is in this simple technique. The beauty of this is you don't have to buy anything. You don't have to take some advanced course. You don't have to worry about what time frame or what market. This is applied in our courses to all markets, whether they're E-mini, whether they're futures, whether they're currency pairs, stocks, and all time frames. Doesn't matter if you're looking at a monthly chart or a tick chart or a 10-minute chart. We always apply a 50-period moving average. We don't care what the higher time frame is doing. Once again, that just makes things too complicated. We don't look at patterns. All we're looking for is where price is in relation to the 50-period moving average, regardless of market or time frame. Okay, so there you have it for free. In our opinion, what is the most powerful way for finding out what the overall trend is. Now we go on to component number 2. Now that we know what the trend is, we want to look for a bar that closes in the top 25% of its range. All right, so this is where students start to have a little difficulty with, especially students that trade Forex, because a lot of Forex traders like to trade candlestick patterns. So looking at this chart, once again, we know that the overall trend is up, and we're looking for bars that close in the top quarter of their range. So people always have trouble because for some reason, I don't know, when I started trading 38 years ago, the range was always the extreme high and the extreme low of a bar. In other words, if we look at this bar right here, this is the extreme high, this is the extreme low. We are not concerned with the open to close range. That is not the range. That's just the range of the open to close, because so many people trade candlesticks now, they think that that's the range. The range is the bottom of the wick, the top of the wick. So it doesn't matter what kind of chart you're looking at. It can be an open, low, high, low, close bar. It doesn't matter. It could be a range bar. The very high, the very low is the range. So what you want to do is find a bar that closes in the top quarter of that range right here. As you see, these bars in green closed in the top quarter. All right. The reason why we're looking for this is because this is a clue coming from the market, not from someone in a trading room or a chat room, not from some so-called expert on TV or in a blog, but this is the market telling you that most likely it's going to continue in that direction. And I can't think of a better edge than one that comes from the market. Now, conversely, I kind of skipped one page there. If price is below the 50, then we're looking for a bar that closes in the bottom 25% of its range. Remember, because the overall trend is down, we are now looking for a bar that closes in its bottom quarter. Okay, so you see how that works there. If we had this bar right here from open to close, we're not concerned. We're only concerned with extreme low to extreme high. And it closed in the top. But since we're below the 50, we want to see that something enclosed in the bottom 25% of its range. All right, now we go to component number 3. We have found that bar pattern, and we've also know what the overall trend is. Now, how do we enter? We're going to enter upon the confirmation of trend. So what exactly does that mean? Because most students would say, I thought we already confirmed what the overall trend is. Well, we just want to confirm that the trend is continuing in its overall direction. So how do we do that? Well, here's our confirmation method. If we have a bar that is above the 50-period moving average and closes in the top 25% of its range, we're going to buy on the next bar only. If that next bar trades 1 to 5 ticks or pips above the bar that closed in the 25% of its range. So in other words, we've located these bars that we have here in green that closed in the top 25% of their range, and we're going to buy if we close 1 to 5 pips above. I'm sorry, if we trade 1 to 5 pips above. My mistake. It doesn't matter if we close there. All that matters is if we trade intra-bar there. All right, so if we look at the first example, here's where we have to trade. Now, it doesn't matter, once again, if we close there, we have to just trade intra-bar there. Now, the trouble is we have to do this on the next bar. So if you look at the next bar, we never got up to that level. So therefore, there was no buy setup. If we go to the second example, well, guess what? We did trade there. We didn't close there. In fact, we closed lower. We're not interested where the close is. We only care about what matters is where we traded. And we traded above there, so that's our entry point. And we went up about 5 bars. Not a lot, but at least there was an edge there. If we look at the last example, this is where we have to trade. And we have to trade on the next bar only. Well, we traded there intra-bar. We did not close there, but once again, we do not care where the close is. All that matters is that the trend resumed in that direction. So that's our entry point, and this one worked out a little bit better. So do you see how simple this is? We are not concerned with any news. We're not concerned with what's going on fundamentally. We're not concerned with one person's opinion in a chat room or a trading room. We're only concerned with what the market is telling us. It's a lot simpler, it's a lot easier to follow, and a lot less expensive because you don't need to buy all these tools and different gadgets in order to tell you what the market's doing. Everyone right now, with the aid of their charting software, can find these setups. Now, if we look at the confirmation on the sell side, remember we are below the 50-period moving average now, and we have bars that are closed in the bottom 25% of their range. Well, now we're going to sell, but on the next bar only, if price trades 1 to 5 ticks or pips below the bar that closed in the bottom quarter of its range. So if we look at that example, once again, this bar in red closed in the bottom 25% of its range. It's below the 50-period moving average. So this means if it trades here 1 to 5 ticks or pips below, this is where we sell. And it doesn't matter if it closes below there or above there. All that matters is that it trades there. The only caveat is that it has to trade on the next bar. We cannot wait 5 or 10 bars. It has to trade on the next bar because this shows us that momentum is continuing in our desired direction. Well, look at the next bar. We traded there, and once again, we did not close there. We closed higher, but that's okay. We entered into the trade short, and look what happened. Once again, you see the tremendous edge you get when you don't make your trading complicated. The reason why most traders fail is because they overcomplicate their trading by listening to outside sources, having someone or something tell them what to do. It's our opinion that the only thing you should be listening to is the market. All right, so now we put all of these 3 components together, and they make up probably one of our most consistent and popular strategies, which is strategy number 4. This strategy it works in any market, in any time frame. It's very consistent, and I'm going to show you some examples that incorporate all 3 of these rules, just to show you that we're not just sharing something with you and then throwing it away. We actually use these in our strategies. Remember, this strategy incorporates all 3 of these rules. Some of our strategies maybe only use 1, some maybe use 2. As you see here, strategy 4 uses all 3. So let's show you some examples of how this is incorporated in stock setups. Our first example here is Tesla. First thing, where is price in relation to the 50-period moving average? Price is above. So are we going to try and short Tesla? No. I don't care what anyone tells you. If someone says it's gone too high, if it's overbought, if it's meeting some Fibonacci resistance, we don't care about those things. If price is above the 50-period moving average, we only look for buy setups. Now here's a bar right here that closed in its top 25% of its range. There's a buy alert underneath because strategy number 4 generates buy and sell alerts. And so we're going to go long if we trade above here, but on the next bar only. Well, it traded above there, and so we went long roughly around 250. You could have bought options. We realized this is an expensive stock, and then look what happened, okay? You see, once again, we're not concerned with news. We're not concerned with Fibonacci levels. We can care less about support and resistance. Those are all too subjective. Everyone comes up with a different answer for those things. We're just making trading simple. We're just looking at a few patterns and then jumping on board. We want to find out what the overall trend is, and then we're looking for setups to tell us when to get in. That's it. We don't overcomplicate our trading at Specialist Trading. FSLR for solar, we ask ourselves, where is price in relation to the 50-period moving average? Price is below. So are we going to try and buy this? No. We're only going to look for short setups, but we have to find the other rules. Now, here's the bar that closed in its bottom 25%, as you see there with the red arrow, and we are only going to go short if it trades below there on the next bar. Has to do it right away. We cannot wait around. So the next bar, it traded just below there, intra-bar. So we went short roughly around 52. And look what happened. Stock went down to 45 all the way into the beginning of July. Another example in eBay, this was in June, coming into June. We are above the 50-period moving average. We get a buy signal. This bar closed in the top 25% of its range. So we want to go long if we trade on the next bar, and we did. And the stock went up roughly from 59.5 to 63.5 in the next week or so. WU, this is a little bit more advanced. We were above the 50-period moving average, then we went below. So it's kind of like, you know, this is a more advanced trade for people who have a little bit more experience through my mentoring of them. But here, the automatic indicators produced a sell signal. We closed in the bottom 25%, and your entry, even though the high was above the 50-period, the entry would be below the 50-period. And look what happened. Stock went from 21.5 all the way down to roughly 18.5 in the next week. Here's another example in LLY, Lilly. Obviously, we're above the 50, so we're not going to try and short it. We're only looking to go long. The automatic add-on produced a buy signal because we closed in the top 25%, component number 2, and we'll enter if we trade above it on the next bar. Well, we did, and you could have purchased at 78. The stock went up almost 10 points in the next week. Remember, we're not concerned with news. We're not concerned with earnings. We don't overcomplicate our trading. That's what gets you in trouble. For some reason, we've been taught, myself included, when I first started out, that the more complicated you make your trading, the more different things and high convoluted logic you apply, the more successful you'll be. And in my 38 years, I found out that it's actually the opposite. The actual the consistency you get is from making things as simple as possible. All right, let's look at futures now, just to show you that this doesn't work just for stocks. We can also apply this to futures. All right, so here's a future of the E-mini, a daily bar, as we see here. A little bit more complicated once again because we're above the 50 period. We have a couple of closes below, but now we close above, even though the last 3 bars lows were below the 50. So is this a buy setup? Yes, it is, because your entry would be right here. Remember, we're going to buy at this point right here on the next bar. And where would our entry be? It would be above the 50. So this would still be a valid buy setup. All right, we see what the E-mini did here was it gapped up, and even had you purchased this, you would have had a nice profit on the close of the day. And guess what? It continued to go up even higher. Now, we realize that not everyone trades the daily bars of the E-mini, so let's go to a 60-minute time frame. All right, this was at the end of June, coming into July. We were above the 50 period, so we're only looking to go long. But once we started to have consecutive closes below the 50, now we're looking to go short. Now, the automatic add-on generated a sell signal, as represented by the downward red arrow. Why? Because we're below the 50 period. We close in the bottom 25%, and we can only enter if we trade below on the next bar. These are all the 3 things I just taught you. These are all part of the strategy course. So we would have gone short roughly around 2100, and on an hourly time frame in 3 minutes, in 60 minutes, in 3 days, the future went down roughly about 50 points or $2,500 per contract. Now remember, this is strategy number 4. I'm giving you 3 of the rules, all right? Out of this strategy, there are a total of 5 rules. I'm giving you 3 of them, okay? Now, I'm sorry, there are 6 rules. I'm giving you half of the rules to the strategy. All right, this is one of our most popular strategies today. I know a lot of people are asking, where do I place my stop? Where do I exit? Well, I can't get, that wouldn't be fair to the people that have paid good money for this. I'm already giving you 3. In other words, this is similar to me having you come into my restaurant and I give you a free appetizer and a free drink. And then you say, well, where's my meal? Can I get my meal for free? I mean, that wouldn't be fair for all the people in the restaurant who have paid for the meal. So in other words, I'm giving you 3 things here that you can start to add on to your current strategy, or you can actually construct a strategy based off of them. But I can't talk about stop or exit. That wouldn't be fair to the people that have already purchased Strategy 4 course. Now here's a 10-minute chart. We're going down to a smaller time frame. All right, a little bit more advanced once again because we were originally below the 50. Then we have 3 consecutive closes above. So once we're here, we would start looking for buy setups, but it doesn't meet the criteria for strategy number 4. Now we open on the very first 10-minute bar here and then close below, all right? So we close below the 50, we close in the bottom 25% of its range, and all we need to do is trade on the next 10-minute bar below this, 1 to 2 ticks or so below this to go short. And you would have, and guess what? Had you stayed in this and used one of our advanced exiting techniques, which we once again teach in the course, you could have gained 20 points in 1 hour. That's roughly $1,000 per contract. Just using this simple technique, 3 techniques that I share with you, along with 3 more other rules to the strategy. All right, so that's the E-mini. Let's go to the Forex now. Let's go to the Forex markets. Here's a signal that was generated for our strategy number 4 course members in the British pound. This was a month ago, telling us to go long the British pound. As you can see here, these are the 3 rules I just taught you. We are above the 50-period moving average. We have a bar here that closed in the top 25% of its range, and we're going to go long the British pound if we trade 1 to 5 pips above it, but it must be on the next bar on the 3rd of June. That's where we want to go long. That's the only place we can enter. If the next day we would have opened lower and then closed lower and never traded at this level, we would not have gone long. But on the 3rd, we did enter, and look what happened. All right, roughly you would have entered at 5,400. Went up all the way up, basically about 500 pips in the next couple of weeks. Remember, we do not look at news. We do not care what's going on internationally within the world. We do not look at cross rates. We do not look at interest rates. We do not look at Fibonacci levels. We do not look at support and resistance. Why? Because there is no, what I found in 38 years personally, there's no consistency in that way of trading. Trust me, if these things all worked, you would see everyone trading support and resistance. You would see everyone basing their decisions based off of the institutionals. You would see everyone basing it off of volume of Fibonacci levels. But they're too subjective. There are some great traders that do very well based on these techniques, but you can't teach them to the masses. Our goal is to teach simple things that have stood the test of time that everyone can see and find, whether you've been trading 30 years or 30 minutes. All right, here's a signal that was generated just a few weeks ago for all of our members in the euro dollar. Okay, we are below the 50-period moving average, right? That's the first thing I taught you. Then we have this bar here that closed in the bottom 25% of its range. Second component that I taught you. Now we're going to go short if we trade on the next bar, which was the 14th. I believe that was coming into the next day, which was Monday. If we went short, if we traded 1 to 5 pips below, that's where we can only go short. Once again, if we opened unchanged and then went higher, then the signal is negated. But as you can see, it wasn't. And you would have entered roughly and made anywhere from 1, 2, 3, 400 pips in the next week or so. This was a signal that all of our members that had the strategy number 4 course were privy to. And you can go down to a smaller time frame. Here's a 4-hour chart of the Canadian dollar. We know a lot of people don't trade daily bars, they trade intraday. All right, here's a 4-hour chart of the Canadian dollar starting from the beginning of July, as you see down here in the bottom left-hand corner. All right, where is price this entire time in relation to the 50-period moving average? Price is above. So why would you even consider shorting the Canadian dollar? Had you tried to short it, you probably would have lost money. See, this is where I tell you, this is the most simple but powerful tool we know for finding the overall trend. You don't need to purchase all these different, indicators and have them all line up. You don't need to look at volume. You don't need to look at what the institutions are doing. All you need to do is apply this 50-period moving average, and it's free. It's on your charting software. You can start doing it today. Right here, you could just see that if you had tried to short, you would have lost money. Why not just simply go with the overall trend, which is up, and look for those bars that close in the top 25% of their range, and then just buy 1 to 5 ticks above, which all of our strategy number 4 signals generated right here, okay? And then lastly, a lot of people say, well, Steve, what happens when you are above the 50 period, then you go below it? Okay, here's an older chart of the euro dollar. As we see here at this example here, we were above the 50, and then we quickly crossed down below it. Well, remember, the rules change whether you were above or below, and we just simply apply the same components I taught you, plus 3 other rules, and look at the signals that were generated. Each one would have been profitable. Remember, we are buying above the 50, but once we see the valid setup below the 50, then we're selling. So let's recap before we go into question and answer. Here's what you learned today. I shared with you what we only use at Specialist Trading for our overall trend tool. That is the 50-period moving average. It is the most powerful and the simplest technique I know for discerning what the overall trend is. I always tell my students, and I've made no secret about this in my presentations, that if I were stranded on a desert isle and I could only use one tool to trade with, it would be this, the 50-period moving average. It has kept me out of trouble and kept me on the right side of the market better than any tool I know. And then guess what? It doesn't cost anything. You can start using this right away. Whether you trade tick charts, 15-minute bars, daily charts, weekly, monthly, it doesn't matter. It doesn't matter if you're looking at stocks, currency pairs, or futures. All right? So now you know the overall trend. We go to component number 2. You learned what bar to look for. Whatever strategy or system you're trading, it doesn't have to be one of mine. You should only enter once you see a bar that had closed in the top 25% of its range if you're going long. And if you're going short, that has closed in the bottom 25% of its range. Excuse me. The reason is the market itself is giving you a clue that most likely it's going to continue. So that's the bar you want to enter on. But it has to trade above that or below it. That's component number 3. That's our entry technique. So you have all of these 3 very powerful components now that you can start using. You can either, once again, apply them to your current technique. Let's say your current strategy or technique is working okay. I really feel confident that if you applied these 3 components, you would increase your odds for consistency. Or we know we have some experienced traders that have been trading for a while. You can build a strategy based off of this. All you have to do is just, you have the entry, you know what bars to look for, you just have to come up with your stop placement and with your exit level and a few other things in terms of money management. It's that simple. We've given you really the core of one of our best strategies, which is strategy number 4. Now, in closing here, before we go to questions and answers, I want you to ask yourself, and ask yourself honestly, do you think any of these edges could have helped your trading this past year? I mean, even if you just use one. In fact, I would like you, as a homework assignment right now, to go back and look at your last 10 or 20 trades and apply the 50-period moving average. I don't care if you trade only 5-minute bars. I don't care if you only trade monthly bars. It doesn't matter. Add that 50-period moving average. And look back at your last 10 or 20 trades. I can almost guarantee that the reason you had losers was because you were selling above that 50 or you were buying below the 50. Remember, if the majority of price or if your signal is above the 50, it should only be a buy signal. If your signal is below the 50, it should only be a sell signal. Once again, I can almost guarantee, I can't promise, but out of my experience, if you apply this technique, I really feel confident you will increase your odds for success much better. And that's just with one of these techniques I shared with you today. I gave you a total of 3. I almost gave you a full meal. Going back to the restaurant analysis here, or restaurant metaphor, I actually, rather than giving you appetizers, I just about gave you a full meal for free. That's what we do at Specialist Trading. Remember, we're an educational company. Even though we provide you with strategies, with all the rules for entry and exit, we're more about educating you with all this information so that you can make your own trading decisions. All right? We don't want you to blindly take signals from someone or something without having any idea what it's based off of. You have to become a part of the process, okay? You have to trade with some purpose, and most traders don't trade with purpose. They listen to the news and say, well, that seems to be good news, so I'll buy. But they really don't have a purpose behind it. They haven't done analysis. They just are doing blindly following what everyone else has told them what to do. take the information that we provide, the sound fundamental information that has stood the test of time, things that I learned 38 years ago that I continue to use in my own trading, and then apply them. And I really think you'll become consistent in your trading. Now, before we go to questions and answers, I just want to share with you what we're offering to all of the attendees today because of our association with FX Street. This is our Secrets of a Stock Exchange Specialist training sessions. What this is a 3-hour video seminar. It's 3 hours of trading techniques, plus I give you the complete rules to a full strategy. Strategy number 1. This is probably one of our best pullback strategies, okay? A couple of years ago, I was asked to speak in front of a large group, a conference actually in Denver, Colorado, and they videotaped the presentation for us. And so it's 3 hours of all this information where I talk about more high probability trading edges. I just don't go over the things I taught you today. I give you tons more information. I go into the difference between a system versus a strategy. But I think the best thing about this 3-hour video seminar is that I give you the complete rules to strategy number 1. Now, a lot of you were asking, well, where do I place my stop? Where do I exit? That is all included in this course. In fact, let me show you some of the recent signals that were generated using strategy number 1. Okay, as you see here in YUM, this is a stock. We had a small, very shallow pullback here, but look what happened. We generated a buy signal using strategy number 1, and the stock went up roughly from 79 all the way up to 95 in the next month. Now, the same rules will work to the downside. Here's one in Costco. The trend is down. Every time we had a shallow pullback or bounce, strategy number 1 generated a sell signal. I don't want you to think that this just works for stocks. Here's a daily chart of the E-mini, the E-mini futures. Now, a lot of people would have thought the E-mini was going straight down, but strategy number 1 generated buy signals, and each one of these sell-offs, each one of these would have been profitable. Once again, I'm just sharing you where the buy setup was generated. We also teach you in this where to exit, where to place your stop, how to trail your stop, and how to use advanced different forms of trading this. And then lastly, we can also apply this to currency pairs, all right? As we see here, I believe this was, it's left my screen. I believe this was the British pound. I'm not really sure, but my screen is cut off at the top there. So what it shows is that we had a sell signal generated right here. And look what happened. The market went down, but then once the market changed trends, and we had a sell-off, a lot of people were thinking, well, we've topped out, we're coming lower. Actually, what we're doing is we're just forming a pullback. Right at the very low, strategy number 1 generated a buy signal, and then look what happened after that. These are all the exact same rules. Nothing changes whether you're trading currency pairs, the Forex markets, whether you're paying stocks, whether you're trading futures. You have the exact same rules for each one. This is included in the course. Now, my sister site, which is ProTrader Strategies, they market and promote my courses. I'm just in charge of the teaching and mentoring. But what ProTrader Strategy does is they market and promote and discount all of my different courses on their website. Now, don't get scared, but they actually market this for a total of $997, this 3-hour video course. That's how valuable it is. But because of our association with FX Street and because of all the attendees taking time out to view my webinars in the past, we are discounting this to $37. So you're getting tons more information and setups and different techniques I've accumulated, different from the ones I shared with you today, along with the complete rules, money management, entry and exit, all for only $37. So this is for a limited time only, though. After, I believe, a couple of days, it goes back to that $997. So I don't think you can really get this much information for that low of a price. So if you're interested, remember, go to FX Street. The link on the very bottom is how you can get all of the information concerning ProTrader Strategies, our discounts, as well as our courses. Or you can contact ProTrader Strategies. There's their email address as well as their phone number. And you can take advantage of that $37 deal. Okay? I'm going to leave this information up here and open up the question and answer. I know a lot of you had questions, and I didn't want to miss any of this. So let me just try and go back. And let's see. The question is this the 15-minute time frame? You know what? I'm not sure which chart you were referring to, but just be advised that whatever I was sharing with you today, the component 1, 2, or 3 works on any market and any time frame, so it wouldn't matter. Okay. It works. I use it on tick charts, so that's how valid all this is. John is asking, where is your stop? Remember, John, I can't give that information. It wouldn't be fair. How would you like it if you purchased a program or strategy and then you found out that I was giving away all the rules after you spent good money? I was giving all the rules for free. That's not fair to the people that are purchased, so I can't give away that information. But you should, if you've been trading for a while, you should know where to place your stop. You can look at the low, or you can put your stop by using a month stop and how much you want to risk. You know, not very difficult to figure out. And then your exit could simply be twice the risk. If you want to use sound money management, if you're risking $100, well, once you got up to $1,000 profit, that's where you'd exit. That's how simple this is. You know, don't make trading complicated. Let's see. How do we know when to exit trades with this money? Please, once again, that would be like you purchasing this for good money and then seeing that I'm giving away everything for free. You wouldn't be too happy if I did that. So once again, that's not fair to the people that have purchased. I've given you away the core totally for free out of good faith. So, you know, it's up to you to figure this out if you don't want to become a member. Remember, using our component number 3, our entry technique, if you're going to enter, you have to enter on the bar that is either trading 1 or 5 ticks above the bar that closed in the top 25% of its range. So the first thing you have to do is find that bar that closes either in the top quarter or the bottom quarter of its range. Once you have found those bars that are in sync with the overall trend, then you just enter, but it has to be on the next bar only, and you enter if they traded above, okay? Remember, I believe this was videotape. So if FX has videotaped this, you can request a videotape to watch this. But once again, I'm not sure when the video is accessible. So if you want to take advantage of that $37 deal, that may have expired by then, okay? Boyke's asking, where is the indicator of signal arrows? I'm not sure what you mean by that, Boyke. Maybe you can ask that again. What do you mean by indicator of signal arrows? The arrows are just, maybe you were saying what is the indicator of signal arrows? The indicator is just generating when a setup has taken place. It's not telling you to buy on that bar, okay? Someone is asking, what is strategy number 1? Well, I already went into detail. Strategy number 1 is a pullback strategy. So in other words, this strategy finds out what the trend is, and then it waits for a sell-off in an uptrend to tell you when to buy. It waits for a bounce or a rally in a downtrend, tells you when to sell. Now, it's only $37, so I think you can't even go out to dinner for the cost of $37. So to get all the full rules, all you have to do is spend $37. I'm sure many of you have probably spent more than that just trading today. Okay, so this is probably, you'll probably learn a lot more than simply your commission costs. Somebody is asking, please show the previous link for the link to buy. Okay, well, here is the link for FX Street. All right. And if you don't see, you can copy this lower case link down here in yellow. We've abbreviated this. This is actually the same as what you see here in blue, but what we've done is abbreviate it so that you don't have to copy all that down. Okay, so just copy this down. And if that $37 deal is not there, then I'll go to the next page once again, and you can call up Pro Trader Strategies and or email them and just say, listen, I spoke to Mr. Steve, or I saw Steve Primo speak at FX Street, and he was talking about a $37 deal. Okay, let me go to the next page if you've copied that. And this is where you can contact them as well. Let's see. The next question is, if the next bar is higher and you are not at your computer, till when can you enter? How many bars later? Well, that's a very good question. I'll just explain what this person means. In other words, let's say you are above the 50-period moving average and you have a bar that closes in the top quarter of its range. So that's a valid setup. Now, what you want to do is enter the very next day, but it has to trade above there, all right? And this person is saying, well, what if you're not at your computer? And when you, till when can you enter? How many bars later? Well, first thing you can do is you can enter a stop order, okay? I'm not going to go into detail because we're not brokers, but you can talk to your broker about that. And that basically is just saying when it gets up to that level, you will automatically enter. and have them explain to you exactly how to do that. That's called a stop entry, okay? A stop entry order. And you can do that if you're going short as well. So you don't have to be in front of your computer. You can just enter that the night before or whatever and enter a stop sell, all right? But let's say you do not want to do that. You'd rather be in charge. Well, I would say you would only want to wait maybe one bar, okay? Wait till the end of that day. Now, obviously, there should be more momentum left in the move. So unless that day it went straight up, maybe 500 pips, obviously you don't want to get in that day. But let's say you weren't in front of your computer and you would have entered and it's just up a little bit or down a little bit. Well, I see nothing wrong with entering that day once you get home. But I would just give it one day. I wouldn't wait a lot more. All right? Let's see. Please. Okay, I showed the previous link. Okay, it's a very good question. Someone is asking about postage. The beauty of this is that this is an online course. The $37 deal is an online course. So there's nothing about postage. You don't have to have something shipped to you. It's a video, but it's an online video. So in other words, we send you the video page, we send you the link, and you can watch it whenever you'd like. You can watch it at home. You can watch it on the weekends. You can watch it at work if you have a break. So that's the beauty of this. You can watch it on your iPad. It's just a video link that you can that we send to you, we email to you for $37, and it's yours for life. I don't want you to think that this is something that expires after a couple of weeks or something that is only good for a month or two, and then you have to pay $1,000 the way some other people do. No, we don't believe in that. Once you purchase it for $37, it's yours. It's yours for life. Plus, you also have lifetime correspondence with me. Just for $37, you can ask me any question you like by emailing. So it's a lot of great perks here, and it just shows you that we're interested in educating you. We're not interested in becoming millionaires off what we do. We're all traders, and we want to just educate you so that you can be trading for a long time as well. And you can tell by $37, that's not going to be a lot of money to learn this valuable information. So there's no postage that's necessary. All it is that you must take advantage of this in the next couple of days, because then it'll go back to the nearly $1,000 price range, okay? Someone is asking on that same question, rather than if you're not in front of your bar, can you go to a lower time frame there and wait for an entry bar? Once again, I know a lot of traders teach this. This, in my opinion, after 38 years, there's no consistency in doing this. It's making things too complicated, looking at different time frames. I know a lot of traders say, hey, once you get a signal on this time frame, go to the lower time frame, make sure you're in sync and look for the same setup. All that has done is served me is make me miss a lot of trades, all right? Just trade the time frame you're viewing. In other words, if you're looking at a daily bar, then just trade that daily bar. Don't go to a lower time frame. Don't go to a higher time frame. There's no consistency in that. We've been taught that for some reason that works. I have found no consistency in that at all. It'll work sometimes, and other times it doesn't work at all. So why use it? Just make things simple. As I stated in the opening sentence, trade simply. Don't overcomplicate your trading. That's why most traders fail. If you're trading the dailies, just trade the dailies. Don't look at other time frames. Don't look at volume. Don't look at support and resistance. Don't look at Fibonacci. Don't look at what the institutions are doing. If these things are so powerful and so concrete, then everyone would be using them and everyone would be making money. It doesn't work that way. Some traders do very well that way, but it's very subjective. They're seeing something that the majority of the rest of us can't see, myself included. It's too subjective. See things that are cut and dry. Everyone will look at a chart and they won't come up with two different answers. They'll either see that price is above the 50 or price is below. See how cut and dry that is? There's no way for two people to come up with two different answers. But when you start going with support and resistance, you start doing Fibonacci, two people can look at the same chart and come up with two entirely different answers. So we don't want to trade that way. That's why traders fail. We want every trader to look at the same chart and say, price is above the 50, I should only be buying. That's right. Price is below the 50, I should only be selling. There's no way you can come up with different answers that way. If you're trading a technique that another trader comes up with an entirely different scenario, I can almost guarantee, it's my own opinion once again, but I almost guarantee that ultimately it won't be consistent, okay? Last question here before we go. Which strategy do you prefer? I personally prefer strategy number four. I'm sorry. 4 was the one I was taught first, and that one works extremely well. And it's plus strategy number 4 is a pattern recognition strategy. You're looking for a pattern, and I have been using it for 30 years plus. I know exactly what to look for over time, so it's very simple for me to see where a strategy 4 setup is. Okay, so it's strategy number 1 is just as simple. But there's one other indicator that you must use, okay? No, strategy number 4 is a different price. You would have to contact Pro Trader Strategies for that. It's not that expensive, but it's not the same as this $37 deal, okay? Once again, contact either Pro Trader Strategies, the information right here, or go to the website that FX Street has put together for us, okay, right here. And you can see all the discounts and all the different strategies we have and everything available for our FX Street attendees, okay? All right, as we close here, I just want to say thank you so much. I give these presentations on a monthly basis. Each month, I try to give you something different to hopefully elevate your trading. I know a lot of traders will talk about what they think and see and then ask the world for you to buy their program. We try to give you every month something for free, as I gave you 3 things for free today, so that you can start using right away, even if you don't want to become a member. But if you want to become a member, trust me, there's so much more to learn, and plus you'll be my personal student. So here's the information you need. And in closing, I want to once again say thank you to FX Street for giving me the opportunity to speak. And as you take one last look at our disclaimer, I look forward to all of you purchasing that $37 deal before it expires. And I look forward to all of you becoming students of mine at Specialist Trading. All right. Thank you so much. Thanks to FX Street, and I'll see you next month. Bye-bye.